It's about that time of day again. My name is Joseph. Wednesday evening, January 31st. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bullish and trying to reach a triple measured move. And that tells me we're already 2 legs higher, which tells me to focus on buying as low as possible tomorrow. And I've got my eye on a hidden channel for the best buying opportunities on Thursday. Speaking of Thursday, S&P is sideways with a megaphone pattern, telling me to focus on failures using the 2-try rule to buy the low, sell the high, and avoid that middle. Nasdaq is also range bound. It has another megaphone pattern on the NQ tonight. That tells me to focus on failures tomorrow, buying low, selling high, and try to avoid that middle. Gold is bullish, the strong spike higher, telling me to look for buying opportunities back at the moving average tomorrow and potentially another symmetrical second leg to new highs. The euro is bullish, but looking range bound right now after buyers rejected the idea of new higher highs. So I'm going to use a hidden channel and focus on buying opportunities down at that hidden channel tomorrow morning. Boy, I got a great newsletter in store for you guys and gals tonight. I apologize I wasn't here with you last night. Hope you guys had a great day out there today. I got a pair of megaphone patterns on the chart. I got a triple measured move, and I got a handful of hidden channels. We're going to put this strategy together for the 1st of February. I can't believe we're already done with January. Before we crack in, though, and put the strategy together for February 1st, I want to make sure to remind you, if you're on YouTube right now, make sure to subscribe to that YouTube channel. Hit the bell icon so you always get notified when I publish something new. Give me a thumbs up if you find value today. And don't forget to post a comment below that YouTube video if you have any questions about anything we talk about tonight on the video. Also, don't forget, if you really want to stay in tune with everything that is School of Trade, head over here to sidewaysmarkets.com, join the mailing list, and you'll never miss another video. While you're here, don't forget, follow me on social. I'm always posting important charts, links, and updates, exclusive stuff you won't see anywhere else on the interwebs, right? Follow me on social, lower left-hand corner. And speaking of those charts, how easy is this? All the charts from tonight's video, that's right, you can have them on your computer tomorrow morning, right where it says click here to download today's charts. Grab those charts and have them ready for tomorrow's trading session. And speaking of tomorrow's trading session, what are you waiting for? Why haven't I seen you on the free pass yet? You're going to learn more with me on that free pass than you will anywhere else on the interwebs, right? Get off YouTube, grab that free pass, and come out and join me tomorrow as a guest in the trade room. And you know I'm always here to help. If you got any questions about tonight's video, drop them in the comments on YouTube or head over here to the blog at sidewaysmarkets.com and use that live support tool, and I'll be there to answer all your questions. I'll put all the links from tonight's video down in the description of that YouTube video. Don't delay, right? Get the information you guys need either on the blog, right, or in the description of the YouTube video. Let's jump right in. Boy, we got a lot to cover here tonight. Tomorrow is the first day of February. Get a short month here in February, so my expectations are high, but we don't have a lot of time in the month of February, so we better get to it tomorrow morning. Of course, we're kicking off a brand new month. We're coming out of the State of the Union address last night. We're coming out of the FOMC announcement, right? And so we got a lot of stuff coming into. We had rollover on gold, so we got a lot kind of breaking free here tomorrow into Friday's session. So I'm expecting to have a great session. We'll be in our trade room tomorrow morning, 8 o'clock Eastern time, with all of our advanced members. But before we get there, though, let's see what we have here tonight on the overnight session. What do we have here? We got manufacturing PMI. We got the, pretty much 7:30, 8 o'clock here. 8 o'clock, we got big news from China. If you are trying to trade the overnight Asian session, be careful with that news from China hitting shortly after I send out this newsletter here tonight. We got some minor numbers here. We got the home prices in Great Britain. We got some manufacturing numbers from France and Germany. I would imagine the big headline numbers tomorrow morning in London will be that 350 and 355 manufacturing numbers, right, coming from our friends in Germany and France. So keep an eye on that if you're trading the overnight London session. And then if you're with me tomorrow morning, 8 o'clock Eastern time, we open up our trade room. We have that jobless claims number at 8:30 tomorrow morning. That should get things moving for us. And then, of course, we got the ISM Manufacturing Index at 10 a.m. Eastern Time. Don't forget, 10 o'clock Eastern Time is almost always a big market moving event. And when you put major news like a manufacturing index number on top of that 10 o'clock, there is definitely a recipe for some big moves. So keep an eye on that time from 10 o'clock into 11 o'clock tomorrow morning. We're probably going to get some pretty good movement. Again, tomorrow morning, 8 o'clock Eastern Time. We'll see you guys in the trade room. We're going to put this plan together right now. Let's jump into some charts here. We've got crude oil, S&P, Nasdaq, and then why don't we throw in some gold and wrap it up on the euro, right? Because I know you guys love to trade that euro. I love the euro right now. Euro has been excellent over the past few weeks. How about some crude? Starting off tonight with a Texas tea, right? The black gold, the crude oil futures. Crude oil is bullish with two legs higher this evening, telling me that buyers certainly have control, but my focus should be buying as low as possible because outside of a very strong trend, when markets start testing these triple measured move areas, we know that most buyers are already in this market from earlier in the day, and we need to make sure we focus on buying at lower prices, right? Buying at support levels such as this hidden channel we have here. Another possible scenario is a range tomorrow. Anytime we have a real strong move on, say, a Wednesday, right, a lot of times the following day, such as a Thursday, we'll start going sideways. If we do start seeing double tops and double bottoms here, then we know we'll have a range, and our focus will be buying the low of that range. Let's jump into the chart here. What do we have here to work with? Well, we had a couple of these, pretty interesting scenario here. We had some small measured moves that made up the beginning part of today's session, but you'll notice, right, that larger, right, measured move, it looks like that's really what they were out there to get today. So, of course, that is one leg, right? Two legs, and now we are trying to get that third leg higher. Now, I talked about this briefly in the introduction. Outside of a really strong trend, and this doesn't really have, the overall day today wasn't a very strong trend, but we do, as you can see, have kind of the end of today's session was a relatively strong trend. But bottom line is, outside of a really strong trending market, usually when we go 2.5 legs up, you're going to have buyers start to kind of get weary about buying really high right now. So we know the buyers are trying to get up to that triple measured move, and that triple measured move will be up at 65.07 unless we pull back below that 64.29 area tomorrow. So 1, 2, and kind of 2.5, 2 3/4 legs up right now. We really want to focus on buying as low as possible. And when I say buying as low as possible, what I'm really talking about is making sure we buy at easy to see support levels. What would be some easy to see support levels? How about a measured move, right? That's a prior resistance. Can be used as support, right? That would be an obvious support level. How about a hidden channel here, right? Draw up at these highs, bring it down to this low, right? You can even connect those two trend lines here, right? And find a nice, easy to see area of support. I say easy to see because remember, as technical traders, we are leveraging the self-fulfilling prophecy, right? And that prophecy says the more people see it, the more it will work, right? And the more it works, the more people will use it, the more people will use it, the more it works, right? And it keeps on building on itself. So we know that those really easy to see trend lines, right, such as this one right here, this will be a really deep pullback, right? Obviously, it'll be a really deep pullback there, but that'd be another example, right? It's easy to see where that trend line would be, and then we can assume that everybody else is going to see it as well. So when I say buy as low as possible, one of the components of that is find really obvious levels of support, because that's where we know buyers will be enticed to get back in or add to their position. It also tells me that we're probably going to want to get below the moving average. You'll notice every time we went below the moving average today, the sellers couldn't get anything done. Every time we got below that moving average, the buyers kept buying it up, right? Every time it pulled back just below that moving average, right, the buyers gobbled it right up. That's what I mean when I say buying as low as possible, right? Get below the moving average. Give those sellers a chance to reverse the trend, and when they fail, jump on it, right, to buy as low as possible. So we've got our 3 legs higher, or 2 3/4 legs higher here. What else do we have here? I talked about this earlier, right? Hidden channel, marking up those highs, marking up those lows. It looks to me like this is probably going to be the easiest channel here to use, right? So that would obviously be a great spot there. Clearly though, that is potential too. We'll see how this market wants to pull back in the overnight, and we can go from there. So we got the triple measured move. We have kind of the hidden channels. We have the obvious levels of support. What are we looking for now? We're looking for an opportunity to buy at that area of support. Let's play that game. Let's do that exercise. We go up, down, and sideways. Now, first of all, let's start with going lower. What if price goes lower? If price goes lower, really the ideal scenario here would be to get this thing down, two-legged pullback, right? Failure, strength, pullback, and back up, right? Two-legged pullback, failure, strength, pullback, right, and back up. That will be coming off of, right, this trend line right there. Maybe it's a little bit deeper, right? Hopefully it's a little bit deeper for the buyer's sake, right? Two-legged pullback, trap low, failure off the, right, failure off the moving average, strength, pullback, and up we go from there, right? Two-legged pullback, failure off the moving average, right? Strength going higher by the pullback for a retest of that high. Don't forget at that point, right, the objective is to get back up and retest the high. That's where you want to be taking the majority of your profit at that time. And obviously the triple measured move, if you have an extra bullet in the gun, right, you can leave that as the runner. So that would really be the ideal scenario if price goes lower. If price goes sideways here, so I mentioned this earlier, a lot of times we do see these markets, right, when they finish the day on such strength like this, nobody wants to buy up here, right? Too high to buy, right? But nobody's taking profit yet because they haven't reached their triple measured move. So if nobody's going to become seller, right? Obviously the sellers can't touch this. It's not a bear market, right? The bulls don't want to get out of their positions because they're waiting to get their targets filled, right? Price starts going sideways here. We start seeing double tops at these highs. Once you see that double top, right? Once we see that strong move up, the pull back, the retest, and we pull back off that high, then we know we have a trading range, and that trading range tells us one try, two try rule. We'll talk more about two try rule here in a moment on the E-minis, right? Buying the low of that trading range. Bears try once, bears try twice to break below that range, and we buy the failure on the second one. What if price keeps going higher? It could easily keep going higher here. What if it keeps going higher here for tomorrow? If it keeps going higher here for tomorrow, not a lot changes. We still find ourselves in a position where we're a little bit too high. We don't want to buy that high right now. So a couple options would be, one option would be wait for a trap low, right? Wait for a little trap off of that high. This will usually be the most effective in the short term. Okay, so if price doesn't pull back and we're starting to get up towards that triple measured move again, don't buy high, don't buy into resistance, buy at support, and an easy area of support is a trap below a prior swing low. It may also, right, we may also get something like this, right, where it does in the overnight, right, trap low, back up, and then, we get that little trap low, right, back up, and then we get a deeper pullback, right? Then we get that two-legged pullback, and then back up, right, to retest that high. Again, kind of off of that area, again, off of these areas of support, right, that we're watching here on the chart. All right, so pretty simple strategy. Price goes up, keep waiting for the pullback. Price goes sideways, focus on failures and traps. Price pulls back lower, keep your eye on those levels of support. How do we turn bearish? How do we reverse? Anytime we look for a trend reversal, we look for strength, a pullback to the moving average, and more strength, right? And more strength going through, right? So strength, pullback to the moving average, right? And strength. Usually that second leg lower is really, really strong. And in that situation, I don't want to chase the move lower, right? What I will do though is attach those lows back to that high and look for selling opportunities off the high of that channel. Oftentimes, we can also use some of these prior support levels as resistance as well. The bulls, they want to buy low and finish off at that triple measured move. The bears want to take control and get back down to retest today's low at 63.67. Let's keep rolling here. Over to the S&P. We get a pair of megaphone patterns. S&P is sideways, range bound with a megaphone pattern, right? Or as I affectionately call it, right, the old bow tie pattern. This tells me to focus on failures using the 2-try rule to buy the low, sell the high, and avoid the middle tomorrow morning. I'll tell you guys, the hardest part about trading ranges, right, flat ranges such as megaphones or bow tie patterns, is staying patient to wait for the buyers or sellers to try twice and break out of that range. Now, breakouts often look very convincing, but until we can see a breakout that actually holds the pullback and continues on strength, we must assume it's still a trading range. Now, I think the most important thing about this chart right now, is the fact that we look left and you can see. Now, of course, I didn't give you guys a newsletter last night. Unfortunately, I was unable, right, to get that newsletter done last night. I talked about that on Monday night, obviously. I didn't leave you hanging there. But if you watched Monday night, you knew I wasn't going to be here on Tuesday night, right? So as we finished up on Tuesday night, right, we had lower highs, higher lows, right, and a flat moving average. That is a trading range, right? We're not making higher highs. We're not making lower lows. It's a trading range. So we know that is a range. The plan for today then would be to sell the high using buyer failures and the 2-try rule. 1 try, 2 try, and then back down into that range. You can see a great example here of the 2-try rule coming off of the high. Then we make our way down to the middle. Stay away from the middle, right? You don't want to fiddle with the middle. It gets really sloppy there. Wait to get back down to the low. 1 try, 2 try, and then a buyer going back into the range. This is a great example of how last night, right, finishing up last night's session, you see lower highs, higher lows, flat moving average. You know you have a trading range. Once we have a trading range, then we look for the 2-try rule, selling off the high, 2-try rule, buying off the low, focus on failures, right, going back into the range. You can see very sloppy inside the range, right? So stay away, right, from that range middle. So now as we open up here in Asia, looking for a 1 try, 2 try, back down in, right? Look left. You can see we're looking for the same basic pattern, right, tomorrow as well. If we can get back down, 1 try, 2 try, right, and buy back in, right? Same kind of pattern as we saw, right, in today's session. Stay away from the middle, right? 1 try, 2 try, back down in. Stay away from that middle. 1 try, 2 try, back up in. Stay away from that middle. How do we break out of a range? You know, hey, that looks like a really strong green candle right there. How do we break out of a range? Like I said earlier, breakouts often look very, very convincing. But until we can see a strong move up, hold the pullback, and show me some more strength, that's the key, right? Because look back here, right? This looked pretty strong too. Pretty strong moves higher here. No, right? Can't keep going through it. You've got to be very skeptical of all those breakouts. And you'll notice I'm not going to recommend, right? I'm not going to sell this green candle. No, it's too strong. That's trade suicide. What I want to do is wait for the strength to subside, wait for those buyers to come back in. Once we see that second attempt, that's going to be the big gut check for those buyers. If they run, you're going to feel it. It'll be obvious, right? When this thing runs, it will be obvious. And if it's obvious, right, with that run, we'll then look for a new bull channel, right? And we'll start looking for buying opportunities, right, up using that new bull channel, right? So we're going to play this by ear, right, to see if it's going to break out. But if it doesn't, 1 try, 2 try, we're looking for that breakdown and then back down into that range. Again, stay away from the middle, right? You can hold a runner through the middle. You can hold a runner back to the opposite side, but you got to be careful entering into a new trade in that middle here for tomorrow. If we can get back down, again, don't even think about trying to buy a big, strong move down, right? You're not going to buy this move, right? Strong move through. You're not going to buy into that? No way. It's suicide for that trade, right? You'll lose money that way. Wait for the next one to try again. And then once you start seeing that second try fail, then you know you're on the right track. And you can see this thing just rockets right back higher here. And it's no surprise that we're going higher here right now, because anytime we see a strong move in one direction, we look for a pullback to the moving average and a symmetrical second leg going higher. So don't be surprised if this thing does look pretty bullish all the way up into that 2840 area. But can you hold the pullback? That's the $1 million question setting up for Thursday's session. Now, as we go over to the Nasdaq here right now, Nasdaq's right gapping up on us here as it tries to get back to that big round number. As you can see, your Nasdaq here quite explosive in the overnight here. It gapped all the way. It gapped all the way from the bottom of that channel, bottom of that range, all the way to the top of that range. This may be my data. I may be having a bit of a data issue on my side here. But you get the point though, right? Here we are back to the high of that range. Can you see the megaphone here in the Nasdaq, right? We're range bound here. We got a megaphone pattern, almost identical chart as we just saw on the S&P. And this tells me there's balance in this market, and my focus should be fading all the breakouts, buying low, selling high, using the 2-try rule, avoid the middle, right, until we can see a clear breakout into a new trend here for tomorrow, right? We in yesterday's session, right, strong move down, but we stopped making lower lows. We weren't making higher highs, higher lows, flat moving average. This was pretty easy to see. This finished the day yesterday as a range-bound market. One try, very strong first try in today's session, pulls back to the moving average. And again, once you see that red candle right there, it's pretty clear, right? The writing's on the wall. These buyers are toast, right? And we're headed back into that range, right? Stay away from the middle. Don't touch the middle. This one actually gave you a chance to double dip on it. It went back up once, twice, and did it again, right? So not only did you have a chance to use that 2-try rule off the highs, but there was also a 2-try rule just outside of that range, right, as well. Now, it looks like the bears really had most of the fun today, because you can see how bearish it was as it went into right, that trading range. You know, though, as you look left even more, though, it looks pretty balanced, right? It looks pretty balanced. So I don't think you're going to have that big of trouble buying off the low, but you can definitely see we didn't get any real buying opportunities here today off of that low. It was really just one try and then right back in, one try, then right back in. So the plan is pretty much the same as it was for the S&P. One try, two try, back down in, right? We got this strong gap higher, and again, it may just be my data here right now. I apologize about that. But nonetheless, though, right, one try up, two try up. Once we see that second try fail, right, we're selling back down in. Stay away from the middle. You'll notice this middle is a little bit shifted towards the downside just because kind of the shape of this triangle, or as the megaphone, I kind of joke around by calling this the bow tie pattern, right? Because it kind of looks like a bow tie, doesn't it? Right? Kind of looks like a bow tie, right? Right? Price rotating back and forth here. It's also called an expanding triangle, right? The original triangle was the one on the left, right? Then expands in the future, right? I call this a megaphone pattern, right? Because, right, it's expanding out, right? We're now seeing it expand outwards from there. So, right, so megaphone from the high down to the low up to the high, right? Stay away from the middle, buy low, sell high. And then again, what does it look like to be, right, to be a breakout, right? Strength, first thing, pullback, and strength. You can see, great example, right? We had a great example here earlier of strength, a pullback, and strength from there, right? Strength, pullback, strength, pullback, strength. Pretty easy, right? Pretty easy. Wait for that strength, pullback, strength. And then we're good to go, right? Then we're good to go finding a new channel, new measured moves, and we can trade in the direction of that breakout. Buy low, sell high, avoid the middle. It's a pretty easy task here on these range-bound markets. The hardest part is just staying patient. And sometimes we spend a good amount of time kind of hanging out right in the middle, right? So if we do, just going to be patient. Wait for the process, right? Because the process works. Next up, over on gold. What are we going to do with this yellow metal, right? Now, of course, we talked about this on Monday. We had rollover, right? We had rollover in today, basically in today's session, obviously. So gold is, what are we going to do with this? It's not, we don't have a lot to work with on this chart as it's coming out of rollover. We're definitely bullish right now with a strong spike higher. You can see this real strong move right into that close. But as you can see, there isn't much else to work with, right? There isn't much after contract rollover. This strong bull move tells me to expect buyers to be waiting on that next pullback for a retest of the highs, right? That's the first thing. That strong move always tells me look for a second leg higher. Look for a pullback, and that pullback will probably either retest the high or make another symmetrical leg higher. However, if the buyers can't show some significant strength to that second leg tomorrow morning, then we need to start thinking about this as a trading range. It's easy to look left and see the highs and lows right from that rollover day and see how we've rotated right from the low back up to the potential high of this trading range. So strong move up tells me to expect another leg higher, right? An explosive move higher. But if the buyers struggle to push new highs, then we need to start looking at this as a trading range, and we'll focus on selling back down into that range, basically for a target going back down to that 1338 area there for tomorrow. So again, had a rollover come out. This is the 418 contract, right? The 418 contract here, right, on the gold. So we know we're on the right front month. You can definitely see we had enough price action right in today's session. But again, you'll notice that rollover day, it was basically three candlesticks, right? Not a lot of volume on that, right, on that rollover day. So the moral of the story is, strong move higher. I'm expecting to see a pullback here. I'm expecting to see buyers come in and buy that pullback. That's my goal on this. Now, this may happen in the overnight session, and so we may not get a chance to participate in that move, right, unless you're trading in the overnight session. So it's going to be all about tomorrow when we come in, what it looks like to new highs tomorrow, right? Scenario one would be strong move up, right, and then, of course, you want to connect these dots for a measured move, right? And that measured move will end up being the target. We don't have enough information yet, right, to find that, but obviously it'll be a measured move. It'll be a new channel, right? And we'll try to buy that pullback on the way up to that target. Okay, so that's the plan for gold tomorrow. Is again, if you're fortunate enough to trade the overnight session, right, pull back, push through. Once we start seeing that push through that high on strength, it'll be strong, right? Because it'll be running out any stops that are hanging out above that prior high. So that will be a pretty strong move. If we get that strong move higher, right, now we know, again, measured move, connect the dots, right? That measured move, that'll be the target, right, for those bulls. And then we'll start using off that low, off of that high, finding buying opportunities, right, off of that support as we go hunting for, right, that measured move target there for tomorrow. So that's the short-term objective, right, short-term plan here for tomorrow. And don't forget, sometimes we see a measured move, right? Maybe the measured move happens early in the session, right? Maybe you can't get involved with the measured move. Don't have to worry, two-legged pullback and go forward from there. Right, so we're looking for those buying opportunities on the way up to the measured move, but don't chase after it, right? If we get to the measured move and you haven't been able to get into it, that's fine by me. Don't push it, right? Don't push into that measured move. Two-legged pullback, right? Two-legged pullback, and then retest of that high. Sometimes it pulls back far enough to incorporate those prior highs, but I wouldn't hold your breath for that. It'll be a two-legged pullback into seller failures, right? Into breakout pullback, right, and then go from there. So that will be the plan tomorrow as the market turns bullish. Now, again, I am expecting buyers to retest this high. I'll be pretty surprised if it doesn't retest the high here. I won't be shocked because it's gold we're talking about, and as you can see, it's relatively low volume right now as we go into a new month of February. But I'll be pretty surprised, though. I'll be surprised if we don't retest that high. The big question is going to be, do we retest the high and then sink back down into this range? Because then it's clearly a two-try rule, right, and then back down in. The hard part here for tomorrow is going to be catching the move off the high or getting in early off the high, because when it comes to a trading range, remember, right, I always recommend kind of think about the 66.6%, right? Think about the 33.3% of that range, right? Take the top third, the middle third, and the bottom third. Stay away from the middle third, right? And again, if you want to sell off the top third, right? And then take your profit in the bottom third. So that's going to be the challenge there for tomorrow, getting in early enough so that you're selling off the high, not selling the low of that trading range. So a pretty easy scenario. Strong move up. We're expecting to see another leg. Anytime we see a real strong move in one direction, we do expect to see another leg going higher to a measured second leg. But again, if they can't hold that move outside of it, it'll tumble back down. Then obviously back down, one try, two try, right, and then back up into that range. So I got no problem fading the edges right now. I just want to make sure, though, this big, strong move isn't going to end up being a successful reversal and a successful range breakout tomorrow. Speaking of tomorrow, what a beautiful chart here on the euro. Euro is range bound after buyers successfully retested the highs of yesterday's spike and channel, but then rejected the idea of buying to new highs, right, earlier in today's session. After seeing price reject off the highs, now we look for buying opportunities at the lowest point of the pullback, right? And you'll notice we haven't quite got there yet, right? We may be in the vicinity of that area, right? But I'd love to see us pull back a little bit further into that battle zone. I have a bit of a hidden channel on here that I'll try to use as well. But the bottom line, though, is if you follow the story, right? I talk about this quite a bit on my newsletter. It's all about interpreting the story the candlesticks are telling us. Again, I do apologize. I wasn't here last night for my newsletter. Trust me, I would have much rather been here with you guys than sitting in meetings all yesterday afternoon. But the reality is we saw a strong move up. We pulled back. We made a new high. That created a spike in channel. Anytime you have a spike in channel, right, we have a pullback, usually a pullback, into what we call the correction zone. It's the battle zone for a spike in channel. And really all it is, it's the area where the channel intersects the spike. And look what happens, right? Price pulls back. We see one try, two try, seller failure, into strength, into pullback, and then back up and retest the high. Doesn't that look really similar to something we've already talked about a few times tonight? Absolutely. Now, once we get back to the high, what happens back at that high, right? Now, fast forward. What happened here at the high? Did we see acceptance? Did we see price explode to new highs? Right? Were buyers cheering it on, buying more as it goes higher? No. What were they doing? It looks like they took their profit. Buyers kept trying to break it out, but one easy clue is what? The moving average. We talk about this relentlessly on this nightly newsletter. Boy, relentlessly, huh? That's pretty strong word. But we do though, right? Anytime we go back to break out of a range high or break out of a range or get through a measured move, anytime we try to see proof, anytime we look for evidence, right, where we go through the objective, right? In other words, the objective was to buy the pullback and retest the high, right? That was the market's objective. If I would have sent out last night's newsletter, that's what I would have said. And if you've ever watched any of my previous newsletter, right, you know I'm not joking. Easy to see, right? It's a spike in channel. The pullback will be to retest the high. The objective is met. Now, show me more. Do we go through the objective, right? Or do we go off of the objective? Do we accept new highs or do we reject new highs? And the easiest way is with the moving average. I'm always being asked, Joe, what's an easy tool that I can use to confirm enough strength so that we know when to keep buying to new highs? The moving average is a really easy way. And you'll notice they couldn't get the moving average above that high the entire session today. What an easy clue there, right, to stay away from buying high up there. So, of course, after that, we call this rejection. And anytime we see rejection, we immediately know, look left, find the deepest part of that pullback, and this is where you want to be buying from. In other words, right, the buyers are saying, this is too high. We don't want to buy up here. Buy low. Where can we buy low? Well, we found some support in that previous pullback. Let's look to do it again, right? So price pulls back. Again, I'd like to see us down a little bit further here. I'd like to use this as a hidden channel, right? Kind of a little bit hidden support level there. But in all reality, all we need to do is just get down to this area down here. And you'll notice we have one try, we have two tries. In the short term, you can look for this as your failure, pull back, and then back up to retest. I would rather be in the failure than the pullback because the pullback, right, is, again, you're in the middle. Failures are great because they harness the power of running stops. We have to assume there'll be stop losses right above the high. So that failure is the short-term option for the move back up to retest the high. Again, I'd rather see us go one leg lower, one try, two try, and then, right, buying up off of that low, using the hidden support level, using those prior swings, even have a hit and run sequence here, right, for a trap low just around that 24,100 area, right? So two try rule at the low for move back up, one try, two try, back up we go from there. Now, if we can get back up to that high, then we can start looking seriously at a breakout, right? Breakout pattern. I want to make sure I get that moving average up above the top of that range. Make it clear, make it obvious, right? If it's not obvious, if it's not clear, you're not going to have as many people participating. So make sure you get that moving average up above that high. And then from there, we've got our measured move. That will be our next big objective. Now keep in mind, right, this may just rotate back up, fail back down, right? We can sell this thing as well, coming back down off that high. Just keep in mind though, there is a bull bias going into that trading range because of the bullishness leading into it, right? So I'd much rather be a buyer at the low, right, than being a seller at the high. But again, like I always mention, if you want to go against the overall direction of the thing, use a half size position, use a quarter size position, right? Just don't risk the whole boat, right? Because it's going against the momentum of that market. So what a great chart here on the euro, right? Lots of story being told. And if you can tune into that story, it'll really line you up properly as far as what you need to be doing next. The spiking channel pulls back, the pullback retests the high, the retest of the high doesn't confirm acceptance to new highs, and therefore we look for the pullback. Now that we have that pullback down in the area, the objective is to go back and retest the high again. Hopefully it pulls back a little bit lower so we can really sink our teeth into this thing right down below the low of that range. All right, guys, I'm glad to be back here today. I hope you guys found a lot of value. I hope this was a great use of your time tonight, and I hope you'll use this strategy, right, to earn a nice big chunk of profit tomorrow. Speaking of tomorrow, though, don't forget, I've got a free pass as part of my free trial. Grab that free pass on our website at schooloftrade.com. I'll put all the links in the description of the YouTube video. Don't forget, we got beginner, intermediate, and advanced classes. We have a place for everyone to begin their trading career. And don't forget, if you have any questions, either drop them below the video on YouTube or hit me up on live support on the right-hand side of the website. Great to be back, right? Anybody out there getting excited about the Super Bowl this weekend? Anybody getting psyched up about the Super Bowl? Who you got? Who's your team? I'm a Patriots fan. I've been a Patriots fan since I was unfortunately a child, where I went through 20 years of torture with horrible, horrible Boston sports, right? We're in our heyday right now. So I'm definitely rooting for the GOAT, right? And the rest of the Patriots team, right? What do you think? Who are you rooting for? Who you got in the bowl on Sunday? Drop me a comment below the video or on the blog. And don't forget, you can always email jj@schooloftrade.com, right? I accept all the trash talking you want. I will graciously accept it with pride. I'm having fun with you guys, obviously, but enjoy the rest of your night. I'll see you guys tomorrow, 8 o'clock Eastern time, trade room session tomorrow with all the members. If I don't see you tomorrow morning, same time, same place tomorrow afternoon, right? We'll do it again on our nightly newsletter. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.